So what impact will the launch of Jacobi's Bitcoin ETF have on the price of Bitcoin?
Well, I think we've already seen some impact, and obviously there's always market reaction to news. However, our intention was never to spike the price or anything to do with the price of Bitcoin. It was really around sort of delivering a regulated product in this space, and really for us that meant having an instrument that could allow mass adoption in a very familiar way that could actually stabilize the volatility of the price of Bitcoin.
And what do you mean when you talk about a tier one Bitcoin ETF? What does that term mean?
The term tier one has always stuck with me from my banking career. We always had in investment banking this sort of classification, which is not necessarily a financial term, but you had your tier one investment banks. What we mean at Jacobi when we say tier one is that we're working with suppliers and partners that are at the top of their field and the top of their sector. For us, whilst we may be listing on a tier one venue, it's not just the exchange itself. It's not just the custodian being tier one. It's everything. It's all of us. It's everything that we've put together is at the top of everyone's sector and the top sort of solution that you could come up with.
So how's a Bitcoin spot ETF, a straightforward Bitcoin ETF, different from a Bitcoin futures ETF? Obviously, both have been heavily mentioned in the news lately, but they're quite different products, aren't they?
Yes, they're entirely different. Bitcoin futures ETF is the assets are a futures contract, not Bitcoin. With a physical Bitcoin ETF like the one we have launched at Jacobi, the assets owned by the fund are Bitcoin, which is exactly why you will see that with a Bitcoin physical Bitcoin ETF, you'll see that the price of the ETF tracks the assets it's holding and it owns. Whereas with a Bitcoin futures ETF, you'll see that the price will deviate from the spot price. And that is simply because it's not correlated directly with the assets it owns and holds. It's to do with the futures contracts.
So it sounds like it's a lot more speculative than a straightforward Bitcoin ETF.
Yeah, absolutely. I think, whilst I think that any regulated products that are available are good for the adoption of crypto and digital assets as a sector, I do believe that the Bitcoin futures ETFs are inherently riskier. You're dealing with derivatives with leverage. You're dealing with circumstances with backwardation, with contango. There's a lot more to it than just a simple, straightforward equity-like instrument, an ETF that holds physical Bitcoin in custody and tracks the price in real time, and where you can get in and out of real time. There's a lot more complexity around a Bitcoin futures ETF than with a physical spot one.
And I mean, most people seem to think that there are already Bitcoin ETFs in Europe. So how can Jacobi claim to be the first?
We've seen a lot of these exchange-traded notes and exchange-traded commodities, ETNs and ETCs in Europe, being marketed as ETF-like. And the reason being is that they are trying to sort of solve a problem, which is accessing the performance of the underlying asset on exchange. However, to call it an ETN and ETF is inherently wrong, and it's misleading, and it's almost dangerous. An ETN is, I think, as many people are now starting to learn, is debt issued by a company that may be regulated. The company may be regulated, but the product itself isn't. And that's what our Jacobi ETF got approval for by the GFSC as a regulated product on its own right. I think that there's a lot of education still to happen in what an ETF is and what an ETN is. But I think the more we sort of have these sessions, the more people understand the difference.